All right. Good afternoon, good evening, possibly good morning. I have absolutely no idea what time zone you are joining us from. This is Don Kaufman, and we're going to go ahead and get started. Hey, I'm just doing a quick sound check. Make sure that you guys are tuned in, turned on. Please chat in where you might be joining us from today. Kind of curious. Either you're in absolute freezing cold, or you're cooking somewhere. There is no in between right now. Then again, that's predominantly the U.S. So all right, here we'll even put the camera on. So I'm kind of ruining it right now. You can't see my background, but there's nothing to really see. I'm in my office. It's not too exciting. So I left Phoenix this past weekend. I am on the island of St. Croix. I'll be here for almost like about a month before I head back. I had enough of Phoenix. I had enough, Super Bowl, golf, car auction. Yeah, I am out of the contest. I am out. It was chaos. Yeah, no, it's interesting. People are chatting in over here, where everybody's from and so forth. The Ahwatukee foothills. I used to live right down there. All right, cool. I know that area extremely well. I actually know Chicago extremely well. I live there part of the time. Fantastic. So as you guys are tuning in here, I'm going to go through some informalities. So welcome everybody. My name is Don Kaufman. I'll be kind of kicking things off officially here in just a moment. Nevertheless, the informalities. Now, number one is somebody always inevitably asks if this is live. Oh, it's live. Oh, it's live. And I like to do this live. And the way, look, when I say live, it's February 22nd, yada, yada, yada. I move at a pretty good clip here today. So sit back, relax, try to pay attention, because as I said, I move at a pretty good clip. The other thing that's important is that you can, of course, ask questions. In fact, if you see me looking around right now, and I'll show you guys kind of the lay of the land here in a few minutes, but if you see me looking around, I have a monitor here, 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 here. So I'm using 6 monitors. This is home for me in the Virgin Islands now. So we do have a home. We maintain a home in the Phoenix area, but I live here now the majority of the time. As I said, after a few weeks of like people, and I did my Costco chickens, I am out of there. I am absolutely out of there. So I'd rather be in the sticks a little bit for a period of time. Anyway, so welcome everybody. So we're gonna go ahead and get started. Again, you can ask questions. We move at a pretty good clip. Even if you think you know what Ultima is, every single time I've ever done this presentation, I have changed it. So get ready. Get ready. Let's get down to it. So again, welcome everybody today. You are watching a TheoTrade presentation, Ultima Alert, high probability income generator. Again, my name is Don Kaufman. Here's a risk disclosure. Okay, this is ours. This is not yours. Now, the risk disclosure is in here because I spent a long time in the brokerage world, and I have to be very frank in saying I am thrilled that I'm out of the registered world. That may sound crazy to you guys, but if you've ever heard anything about like FINRA, they're 10 times worse than they actually appear to be. There's actually a lot of restrictions coming down the pipe too. So I always throw this up here because I'm no longer in the brokerage side of the business. I spent time in the market making, risk management. I spent time in the brokerage business, 15 years in the brokerage business. But well, I'll describe my background here in just a moment. So a few housekeeping items. Look, what you're going to embark upon today is a skill set. I mean, I go through, as I always say, a tremendous amount. And I do it in a rather short period of time. So I know a lot of people go to, different webinars and so forth, and, they're 45 minutes. Look, we're going to run, okay, 90 minutes or so today. I hope that's all right with everybody, because I've even added a few more slides this morning. And I hope you don't mind, but it's education, and we're going to provide it for you. And hopefully we're going to take our time, make sure everybody understands exactly where we're going with this. I always say close Facebook. Does anybody actually use that anymore? Turn off Skype chat, whatever else is distracting you. Put your phone on silent mode. Definitely kick out the kids. They are gone. The dog can stay. Look, all I'm saying, you took time to be here. Focus, be here, because again, we're going to go through a lot. We also provide a gift to you for attending today. Stay with me right until the end of the webcast. We're going to provide to you the auto expected move indicator. This is literally an indicator that's it's changed the way, that we look at markets. In fact, the auto expected move indicator today is far more important than it has been at any other course in time in history. If you've listened a little bit about markets, like there's what they call 0-day expiration. This is the auto expected move indicator that literally tracks exactly that. So stay with me right until the end of the webcast. If you have no idea what an auto expected move indicator is, this is what it appears. By the way, this is Microsoft yesterday. I took the screenshot yesterday, but if you know anything about me, I'm not a big fan of screenshots. Like I like to do stuff live. And that's why I host this during the trading session. But just to show you the auto expected move indicator, and I'm going to click on it right now. The auto expected move, which is of course right here, it's these three little lines. It's what the option market depicts risk to be. So the option marketplace, what an option really is, you can call anything you want. It's the right to buy, it's the right to sell. What an option though really does is it handicaps, forward risk. So meaning that it says we're supposed to move up here or down here. Now, somebody was actually asking in here, does this indicator only work with thinkorswim? The answer is, initially the answer was yes. However, in the recent days, I have actually used, you're going to love this, Chat GPT, and it can actually convert the script into several other languages without, this is a script that would take, I don't know, probably close to a month to recode into something else like Pine. Chat GPT can do it in 45 seconds. So yeah, no, you can actually take it and convert it these days. So Thomas, I do appreciate that question. It's an interesting one. So if you look at this on Microsoft, it's amazing because it found right there, we bounced. You want to see something even more amazing? Check this out. Look at the S&P 500 right now. If you don't think this script is worthwhile, check this out. This is the S&P 500. See that line? That line was actually drawn last Friday. Why are we on it right now? Because we're actually holding the lower edge of the expected move. We're literally holding, I'm going to show you in broader context, we're holding the lower edge of the expected move. The exact same thing is true, of course, in Microsoft. And this is the indicator that we're going to provide to you today. There's a lot, a lot of stuff that you can do with that particular indicator. All right, so onward and upward, I just wanted to, enunciate for like a moment in a live trading environment. It's important. Like, let's not talk about like, simulations. It's a live environment. Stay with me right to the end of the webcast. Is a $500 value that we give it to you. It's because we want everyone to be looking at, well, what's actually driving market and order flow these days, and that's expected move. All right, this is why you're here. Right down to business. We're going to talk about Ultima and what Ultima trades really are. By the way, I want to just cover something right off the bat. Ultima does not mean ultimate. Ultima is the volatility, the volatility, the volatility. You're like, what? Ultima has to do with a dramatic shift and a change, if you will, in how volatility is pricing things. So we're going to talk about Ultima, how you can potentially generate some income. Learn trading simple professionals use to be able to create ultimate trades. You're going to learn where to find edge as a retail trader. We're going to talk about edge here in just the next couple of moments. Like, what's edge? It's something repeatable that you can do. It's not about like a MACD or Fibonacci or the Bollinger Band. Oh, this always works. This pattern always works until it doesn't, right? We're going to find definitive mathematical edge here. Number 4, we're going to reap benefits of high probability trades. But the most important thing you're going to learn, you got to mitigate the downside risk. You got to mitigate risk. When I say mitigate risk, you're going to hear a word a lot today. It's called hedge. How many people are familiar with the term hedge? And I'm not talking about the little bushes out in front of your house. All right. We're not going to let you go into this marketplace, especially this marketplace, without some risk mitigation tactic. I think that's incredibly important. You're also going to find out which products make viable candidates and what is a recipe for disaster, right? Let's get into it. By the way, these are not rhetorical questions here. Come on, people, make some noise. Anyway, here's a little bit about me. I watched order flow for 15 years. That's in large part why I'm here. It's kind of a weird thing to say that, but a lot of people are not familiar with order flow. Look, the bottom line is this. I spent time in, early on in my career, trading and managing risk for a market making firm. I then joined a startup brokerage firm just a few years after that. It was called thinkorswim. Nobody even knew what a thinkorswim was. I joined a thinkorswim about 2001 is when I went on officially with thinkorswim. How many people here are familiar with thinkorswim? So anybody? Okay, anybody? By the way, these are the non-rhetorical questions, the one you're supposed to use. Yeah. So I helped build a lot of the tech on thinkorswim, but my job at thinkorswim, I ran the education division of it. Now, people always ask me the question, how I got involved in this business. Listen, I grew up around traders. My uncle was a market maker. My cousins were market makers, and if you want to weigh into a business, I got out of college and my cousin needed a runner on a floor. I was 3 weeks out of college. I was eating ramen noodles. Next thing I know, I was in Chicago and I was trading. And a short time after that, they were like, "Hey, the kid is not an idiot." So they actually put a jacket on me and we traded. The rest is kind of history. Then I met some traders on the floor and they approached me on the side and they said, "Hey, look, you clearly know the business. You got to get off the floor. We're starting a brokerage firm. Come with us." I didn't know any better. I was 24 years old, so I went with them. And it was Tom Sosnoff, Scott Sheridan. I worked side by side with Sosnoff for the better part of about 10 years. When we actually took the company public in 2007, I was actually on the executive team. We were bought by TD Ameritrade in early 2009, and then I signed a 5-year lockup clause with TD Ameritrade. So from 2010 to 2015, I actually ran education for all of TD Ameritrade. At the time, we had 7 million clients. And when people ask me all the time, like, "Well, what's this order flow thing?" Here's the bottom line. I got to see everything that you did. In fact, most of the team here at TheoTrade's not just a one-trick pony. It's not just me. It's not just Don Kaufman. I mean, we've got Blake Young. Where's he come from? Thinkorswim TD Ameritrade. We've got Jeff Bierman. Where's he come from? He ran hedge funds and so forth, but Thinkorswim TD Ameritrade. We have Brandon Chapman. Where does he come from? Thinkorswim TD Ameritrade. We took a huge amount of the education core. Again, I had a 5-year lockup clause. I left 4 or 5 months later. One by one, they kind of straggled out and joined us here at none other than, of course, TheoTrade. We even brought over Todd Sweet, who was a recent market maker, turned obviously TD Ameritrade, and we grabbed him in the last year. So it's pretty full crew that we've got here at none other than TheoTrade. One of the most important concepts, though, that I really hammer into you is that, listen, when it comes to trading, okay, and understanding this business, buck stops here. I've seen everything. Like, you're not going to throw anything at me. "Oh, I've never seen this before. Oh, this is unusual." Never. Okay, look, right? We are completely here at TheoTrade, and this is critically important. We are completely no holds barred. If you have a question about a position, I don't give a crap. I will show you everything. I'll show you account value. Look, I'm down $615 today. By the way, my account usually moves on an average, okay, of $7,000 to $10,000 a day. I can show you all the different account values in here, account statements. There is nothing that we will not show you when it comes to like account balances. Look, there was 325 in there. Now there's 336. Okay, we show you everything, every nuance, every position. I trade here. Okay, here being Thinkorswim. I also trade here on Tastyworks. So I've got quite the number of accounts over at Tastyworks as well. All right. And here's all my positions in Tastyworks. As I said, I am adamant about one aspect of this, and complete and utter transparency. Every trade, every hedge, everything you get to see. So I really do stress that to everybody, because most of the stuff you guys get in the education side of the business, I mean, you have like a high school teacher turned trader or taxi cab driver turned trader. Look, there's very few people that actually grew up in the business. I did. Not only did I grow up in the business, then my entire adult life has been spent with traders, market makers, and that's just who we are. It's all we know. So it's a big portion of what you're coming to here at TheoTrade. By the way, if you ever need to get a hold of me, and I'm serious about this, email me. Right? We use a common inbox. Just go to support@theotrade.com, put Don Kaufman in the heading. It'll go directly to me. Anyway, it's important to me that you know that you can reach out after today's session. Next in the docket here, I've done a couple of media appearances every now and again. By the way, this is TD Ameritrade TV. You know, it's crazy. That's the last time I was in Chicago. Like, I grew up going back and forth to Chicago. I have not been in Chicago since 2019. It's crazy, crazy stuff to me. But by the way, I just did TD Ameritrade TV a little over an hour ago. So I'm on there every single week. I do some CNBC appearances from time to time. Obviously, this is one of the most memorable CNBC appearances because they pitted me, an unshaven me, against partially unshaven Kevin O'Leary. So yeah, it's by the way, I was the short and he was the long in that one. In terms of other media, this was actually a really big one. This is the cover. And again, there's not too many things in your career. You're proud of this, proud of that. This is actually a big one, and I'll tell you exactly why. This is the cover of Investors Business Daily. But if you look at the date, okay, it's fairly recent. It's December 19th of 2022. So it's the end of last year, okay? Bringing profits in a sour marketplace, okay? That was the entire headline of the paper. This has actually been the best year I've had since the financial crisis of 2008. How unpopular of a quote is that? Except that's me. That's actually my quote at that particular point in time. And it was, again, I have no problem saying, like, last year was quite spectacular. This year, it's more of the same. Let's get down to business. Let's trade. Volatility's arrived. So one of the things that I implore you to understand is whatever's been working for you, up until 2022, things worked. Anything could have worked because the Fed was, had your back. It's pretty evident right now. Fed doesn't have your back, right? Inflation's still running red hot. And you know what? That's not really up for debate. Did you see the last CPI? That came in a little hot. We got a PCE indicator later this week. So Feds are pushing rates higher, obviously contracting the balance sheet. There's Fed minutes coming out today. Okay, it's been a very strong dollar. Even though the dollar is backed off, still been strong, and geopolitical risks are proliferating. Boy, is that an understatement today. I mean, seriously, that's the understatement of all understatements. All of this, what does it really amount to? Like, what does it amount to? Volatility's arrived. I'll tell you exactly what it amounts to. Game on, right? This is about game on. Just embrace the chaos. Look, markets got real in 2022. When I say markets got real, there's a little bit of background knowledge that I think is imperative to have to be involved in this. Okay, let's start with the background knowledge of this is the spiders. Okay, this is the spiders. And with the spiders, let's pull up the max chart. When I say that markets got real, right, that little pullback became real, right? And all of this, this is real markets. These are two-sided markets, and two-sided markets, I mean, they go up and they go down. Right in here, that's where the Fed basically stepped in, and it was a Fed-fueled fantasy to the upside. Lo and behold, here we are. Okay, and it's maybe a little bit ominous. And again, you don't know how this is going to turn out, neither do I. I don't want to get all bared up on you. That's not my intent. I'm not here to sit here and go, oh, I'm so bearish. Okay, forget whether you're bullish or bearish. You're going to make a difference. Okay, look, stock picking and Reddit boards. Like, I make fun of Reddit because you got 20 somethings in these chat rooms that are basically like, we're gonna run the market. That lasted 6 weeks. Seriously, that lasted 6 weeks of 2021. When we, had the GameStop pop. So stock picking and Reddit boards are just not going to cut it. You're going to need a strategy that embraces chaos and volatility. Okay, you can't rely on directional bias. If you rely on directional bias right now, you're already dead. You're in trouble, right? And if you don't believe that, again, you're like, but everything's worked this year. Okay, it's worked this year. Why? Because the S&Ps are up 10%. You know that this is actually the smallest rally that we've had. Okay, smallest rally we've had since the beginning of 2022. Grab that one for a second. That is not making a headline, and yet it should. Think about that. This is the smallest rally we've had. You're like, what do you mean? You do know there were rallies of 15 and almost even 20% in the previous year. Back to the spiders for a second, because I think that this is absolutely imperative to understand. If you look back at the last year, you're like, what's different about this rally? I'll tell you, that rally was bigger. That rally was bigger. That rally was bigger. Okay, you're like, oh, it's an interesting point he makes. It's called bear market rallies, but this one, the difference of this one? It was the beginning of the year, and they call it it's the January effect. Okay, unless of course it's not the January effect, in which case I better learn something. Okay, so you can't rely on directional bias right now, in my opinion. and that's fine. And then reduces risk while substantiating monthly returns. What do we have for you? Ultima trades, higher volatility in this marketplace. And again, that's something that you really can't argue. There's been higher volatility. Volatility really picked up in the post-COVID world. COVID kicked off March of 2020, really in February of 2020 is when volatility started to rock, hasn't stopped. Okay, we're 3 years, almost to the day, 3 years into it. Okay, legitimately, February of 2020 is when vol picked up. So there's significantly more options premium, but Ultima trades are actually designed to sell options premium, but at the same time, reduce risk. So on one hand, we're going to sell, the other hand, we're going to reduce risk. How can you do that? Well, that's exactly what we're going to discuss over here. Now, for those of you that are not, familiar with, okay, again, I have said this several times already today. I'm using the O word. Okay, what's the O word? Options. I'm scared. Hold me. Anybody here have absolutely no experience with options? And it's okay. You can say, I have no experience. By the way, I'm reading chat over here. All right. So this is the interactive portion of it. There's a lot of people on today, but we're very quiet. Okay. It's a very quiet group. So let me take it. All right. Let me ask the question another way. How many of you do have options experience? All right. So how many of you do have options experience? Fantastic. So most people that have options experience, I like it because somebody actually said extensive. Another person came in here 20 years. That's awesome. Somebody said none. Cool. I do appreciate it. Okay. Sorry, the best comment came in. Yep, sucked. Sorry. That's awesome. So I'm easily amused. People often ask me like, "How are you still doing this after all the years?" Sheer amusement. Okay. I mean, we started TheoTrade because I was home after I left TD Ameritrade. There was no game plan after leaving TD right away, and I was home and I would just like yell at the computer screen anyway. My wife's like, "You should put a microphone in front of it." She goes, "Because first of all, some of it's funny. Secondly, she goes, it would make me actually feel a little better that somebody was actually listening to you." So in order to stay married, we launched TheoTrade. It worked out well. So we're going to talk a little bit about selling options today. And don't worry if you're brand new to it. It's okay. I'll go from the basics, but I am going to work into the extremes. So if you've kind of learned about selling options, people always hear this, like what I call the option grapevine. Okay. People always hear like selling options is a way to make money, right? And it is, like it absolutely is. But then many of you have experimented with selling options. When you've experimented with selling options, you go, I was making money right up until the Mack truck hit me. And you're like, did you catch the license plate of the truck that hit me? Okay. It's crazy. Like people make money, get annihilated. That is the plight, if you will, of the option premium seller. We're going to actually put all that to bed today because we're going to talk about selling options, but we're going to do it in a fashion that is, well, considerably safer possibly than you have done before. So what I do in today's session, separate myth from real risk, fact from fiction, selling options premium, and it's important. It's really important. By the way, I like what somebody's asking over there, delta and so forth. Okay. You're not going to have to worry about gamma. Yeah, I'm going to get into that. So for those of you that are brand new, do not panic. You can do this. Maybe you know nothing about options is okay. It's okay for today's session, but there is one big caveat that I want to hit. See right here, small accounts under 5K and retirement accounts. You can do anything you want now trading options in small accounts under $5,000. In fact, you can even have a $2,000 account. By the way, people don't believe me when I say you can do anything you want. When you trade options now, you can do anything you want in a small account. So it got me to the point where, Don got a little angry. And look, here, these are not small positions, okay? When I say not small positions, there's a crap load of positions in here. Sorry to be so literal. There's a lot of positions in this. And with these positions, you want to know what? Okay. Yeah, this is only tying up $3,000 of margin. Okay, that's my capital requirement. That's a $5,000 account. How about that? How about that? Now the P&L is not huge yet, but this account, I just funded it. Okay, this has not even been around, right? I did this exclusively for this session. Okay, I set up these things for these types of sessions to be like, oh no, you can do anything you want. And this is a $5,000 just account over at Tastyworks. So anyway, I figured I'd mention that. Anyway, let's get into it. So if you're brand new to this, just breathe, breathe. Okay, we're going to start with the basics and work into the extreme. Let's dive into it. So there's a lot of facets of selling premium. Even those of you that are experienced, sell premium. What am I talking about? I'm talking about selling options. Sell premium, credit spreads. Okay. You guys will hear these terms like bull call spreads and bear call spreads and bull put spreads and bear put spreads. Oh my, and delta neutral trading and iron condors and mambo combos and conversions and reversals and selling naked. You know, all of that crap amounts to selling premium. There's a lot of things that you can call selling premium. You know, this entire business, people make this business way more difficult than it needs to be. And I'm really serious about that. You know, why do I say that? Because, you know, when they told me when I first got involved in trading, they said, Don, listen, there's all these name strategies, but in the end, you have a call and you have a put. And what can you do with a call or a put? Okay. I'll tell you what, you can buy them or you can sell them, or you can sell them and you can buy them. That's it. You go, you have a call, you have a put. Well, you can sell these or buy these, or you could sell these and buy these. Okay. Or you could do a combination thereof. And all of a sudden, what are you left with? You're left with an iron condor. It's amazing, right? In the end, okay, you can buy something or you can sell something, and that's it. So we're going to get into exactly that. Oh, by the way, how our members are doing. I actually wanted to grab something recent for you guys. This is yesterday in the chat room. Christian said, yeah, 100%, Randall. I spent the first 19 years trading without making any profit. But then last year, joined TheoTrade, and I'm finally profitable. Don's Ultima strategy. That's exactly what we're going to be talking about today. And now dipping into intraday trading with Tony and Corey's system. So again, we're not a one-trick pony. This comes from Judd yesterday too, doing very well. I've taken off several trades profitably. How our members are doing. Okay, predominantly follow Ultima, now flyby, up 30% year to date. And I just wanted to show you this. That was a little bit older one, but accounts up 30%. That was November of last year. How many people were really up 30%? Few and far between. Seriously, few and far between. Okay. With that, probability and profitability. So one of the first things I want to allude to is that your trading is actually based on probability. Everything you do in this business is based on probability. You know, you can say like I have a 90% probability of success, but just because you have a 90% probability of success, does that imply that you're going to make money? And the answer is no, it doesn't, right? And it's really, okay, important to me. It's really important to me that you guys understand that probability alone doesn't make you profitable, because all the time, and I'm going to tell you exactly why I bring this up. Let's just cut through all of the garbage out there, right? You go to different websites, they go, look, okay, I'm right 95% of the time. Okay, we even have advertisements that say exactly that. You know, I was right, 200 and some odd trades in a row. But it's still imperative, okay, that you have a risk management tool in place, because without it, okay, you're done. Because markets are always a trade-off. Markets are always a series of trade-off. Higher probability, higher risk. You could be right 90% of the time, you can still lose money. So where can you actually find edge? Because that is what people are here for. Because now we're going to show you something very important, right? No matter how many times I've actually done this session, I use the exact same example, just to kind of give us like a baseline of understanding. So if you've actually been to one of these sessions before, I'm serious, don't tune out. Okay, don't tune out. I think it's still critically important. So just dragging out my little drawing board over here. Okay, we're going to draw some stuff. So if you take a look, this is a $100 stock. Now this can be a fictitious stock. I really don't care what it is, right? And owning stock right now, in my opinion, is dangerous, scary. Okay, you have $100 stock. Let's be frank. This year to date, maybe it's gone up. Okay, all day yesterday, everybody's like, whoa, whoa. Okay, and if your stock wasn't up dramatically, it could be actually down in the year. In my opinion, this stock is a highly risky animal, especially in heavy volatility. You know, everything when it's going your direction, okay, when things work, people don't question risk. Now that things are a little bit more, if you will, real, now everybody questions risk. In the first example, we are not going to own stock. Okay, just say no to stock. Okay, why? All right, because it has a lot of risk. First example, I'm going to talk about a call option, and we're going to look at buying a 120 call. And we're going to pay exactly $1 for that. Now, just stop right there. Some people have absolutely no idea what an option is. Options are really, honestly, they're not that bad. Okay. Now, I am very aware of the fact that I grew up in trading. When people ask me a question like, when did you learn about calls and puts? I'm like, okay. I can tell you though, I do remember dinners with the extended family. Like we'd have like Thanksgiving dinner. And they'd be talking about calls and puts. And I was like 13 and I'm like, yeah, in the money. Oh, I'm so in the money. I'm so in the money. Okay. I didn't really know what that meant at the time, but to me, that was regular like dinner table kind of language because I grew up again in and around traders. I don't really know when I learned what a call or a put is. I know it sounds weird, but it's true. I really don't know. So when you talk about calls, like a call option gives you the right to buy. So option buyers have rights, option sellers have obligations. In this business and options, forget about stock for a second. In options, you can always be a buyer or a seller, period. You can always be having rights or always be obligated. And you can actually choose whatever side you want to be on. In this case, we're going to buy a 120 call. If you don't know what a 120 call is, it gives you the right to buy the stock at 120. Do I want to buy the stock at 120? Obviously, I do want to buy stock at 120, but that's not why I bought the 120 call. I buy the 120 call because I think that stock is going to go up massively. If this stock is at 100 and rallied and rallied and rallied and rallied all the way to 120, okay, then I'm gold, Jerry, I'm gold. Okay, but look, that stock has to go up $20. Better yet, it has to go up 20%, 20%, and that doesn't even make you break even. Like that's a phenomenal move to the upside. Am I right? Phenomenal move to the upside. So you got to move from 100 all the way to 120. I mean, you got to get to 121 just to be able to break even. Time out. What do you think the probability of that trade is? Now, there's no real or definitive answer. Like, but what do you think the probability of the stock going from 100 all the way up to 120 is? Like, what do you think? Huh? Okay. What is the probability? I don't know. You guys tell me. What do you think the probability is? Take a shot, man. Take a shot. Okay. What's the probability associated with that? When I put a percentage in there, yeah. By the way, I'm a buyer, not a seller. I like it. Okay. I like it. A lot of answers in here. Most likely the probability is anywhere from about 5 to 10%. About 5 to 10%. And I don't even put the time in there, but it's probably relatively accurate, about 5 to 10%. Well, great. All right. Let's say it's 3 months of time. So in this next case, I'm actually going to make this trade a little different. I'm going to put 3 months of time on the board. Dun, 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 dun. And instead of buying the 120 call, in this particular case, we're going to go out and we're going to sell a 120 call. We're going to sell a 120 call. And this is actually what we term sell it naked. We're going to sell a 120 call and we're going to collect exactly a $1 credit. Now I'm going to put that down below over here. Like, look, we're going to sell a that's a 20 call. We're going to collect exactly $1 credit. Now, that is it. The first thing somebody is inevitably going to scream out at me, they go, what about margin? Okay. For those of you that are, margin hungry animals, relax for a few minutes. Okay. I promise we'll talk about margin. I promise we'll talk about margin. But imagine for just a second, just a moment, imagine that margin didn't exist, because you're going to learn it doesn't, because there's a way to circumnavigate the margin requirement. So imagine, okay, in the surreal world that margin, okay, is spectacular. They give you all the money you want. Okay, how do you think I'm actually trading options with a $5,000 account? Okay, and do anything I want, because I'm going to show you exactly how to circumnavigate. So we're going to go out and sell a 120 call. And I love what somebody already said. They go, what if it goes to 150? That's a good question, because that's completely naked. You go, oh my gosh. Okay, because I'm naked here. But I want you to understand this trade. Let's not worry about risk just yet. We're not quite there. What I first need you to understand is the probability in this trade. Okay, what's the probability in this trade? Well, you got 3 months. Okay, if the stock stays flat, you keep $1. If the stock goes down, keep $1. Even if the stock goes up, you keep $1. If the stock gets all the way to 120, you wet yourself, but you keep a buck. When do you start losing money? You start losing money at 120 plus the dollar you collected. So you start losing at 121. And as we go higher, you're going to be like, oh, the pain, the agony. Like, look, in most cases, you're going to make $1, but you're going to have to wait 3 months. And I did that intentionally. 3 months to make $1. You're like, oh, this seminar is starting off great. Okay. I just sat here for 30 minutes to learn how to make $1 in 3 months. Yeah. Sign me up for that one. Yeah. We're not home yet. We're not home yet, but I want you to understand conceptually what I'm doing here is I'm selling the nosebleed seats. I'm selling like a seat that's in the parking lot that is like tailgating that can't even see where the game is because there's such a high probability associated with it. But I love the question, like, what if we do go from 100 all the way to 150? You know what the answer to that is? Oh, you in trouble because you sold a 120 call. Now, look, buyers have what? Rights? Sellers have obligations. If you sell a 120 call, you've actually sold yourself into a situation where, wait a second, what is selling a 120 call? You've sold yourself into a situation where you have to give somebody stock at 120. And you go, but do I own the stock? And I go, no, you don't own the stock. You go, but if I don't own the stock, how am I going to give somebody stock at 120? I know, you buy the stock at 150, give them the stock at 120, you lose $30. Oh, but you don't actually ever have to trade stock. The cool thing about options is you buy and sell options just to be able to buy and sell options. Most option traders never trade stock. You don't have to. You could, but you don't have to because I'm selling a 120 call. Why am I really selling the 120 call? I want to collect $1. Okay. I'm serious. Why am I really selling a 120 call? Because I want to collect $1. But what happens if I don't? What happens if I end up losing 30? It's possible. Okay. We're going to make it not plausible. It's possible, not plausible. And we're going to bring that up. Ready? Okay. Let's go into a live market. Are we ready to move on? Okay, we're going to move right into a live market. So this is a platform called thinkorswim, and thinkorswim, S&Ps are now up 15 points. Okay, we're going to go ahead and close up this left side bar, and I'm going to go all the way out. You know, I'm not even going to do 3 months. Look at this. This is an 86-day option. Watch carefully. I love doing this because it's really going to torture you. This is an 86-day option. No, I'm going to the 114 days. Why? Because see, what people don't understand, okay, if you really want to start to understand Ultima was this dramatic shift I was talking about in terms of volatility. Skew shifted, volatility has changed. And what, okay, are we doing? What are we doing? We're selling options that are way out in time. Look, why sell options so far out in time? You noticed in my example just a moment ago that I sold options a few months out in time. Typically, traders sell short-dated options. But people, this is why you're tuning in to the webcast today. You're going to learn, okay? You're going to learn how spectacular, all right, that longer duration options is. And you know what's so interesting about this is all of a sudden there's this infatuation with like short-term 0-day expiration. Let me tell you something very, very forthright. If it worked, don't you think I would do it? We're moving around a couple of $1 million in and out of accounts, okay, on a day-to-day basis. There's no if, and, or but about it. These are all accounts, okay, all live accounts. You want to bring up the tasty accounts, all live accounts. A few $1 million are moving through here. If 0-day expiration worked on the retail side, I'd be first one there, okay? It's a recipe for absolute destruction. It's exactly what we're going to talk about here. We are selling, okay, further out in time. When people look at a decay graph, okay, decay graphs look like this. Options burn slowly, and then the closer you get to expiration, they accelerate. That could not be further from the truth, okay? Now, you know, it's all well and good when somebody says like this, that, and the other. Proof is always in the pudding. Let's go to a live options chain. Let's go to a live options chain. In the spiders, I'm going to go 114 days out, right? And I'm intentionally going to select an option. Just bear with me on this thought. I'm intentionally going to select an option right around $1, okay? Right around $1. So it doesn't always work out perfectly, okay? But I'm going to select an option right around $1. Here we go. Okay, this will work. It's the best I can do. I mean, this one's 82 cents, but I'm going to select something right around $1, and I'm just going to use this for my example. So we're going to go out, and I'm going to write it on the top of the screen. Okay, and we're going to go all the way to the 16th of June expiration. Okay, Don is going to sell the 455 calls. I'm going to sell the 455 calls. Okay, and I'm going to collect on that trade. By the way, the market's $13, $16. I'm going to go ahead and say I'm going to collect, okay, $1.16. By the way, let's make that a little bit more official. So market's 113, 117. I'm actually going to work that order. Okay, here market's 113, 117. I'm going to work the order $1.16. Right, so I'm just going to route a one lot in here. You're going to see the market move $13, $16. So now I am the best offer on the screen. You go, what is he doing? Okay, I'm setting the market. Okay, so welcome to the stock market. Look, I am actually making the market in here. When I say making the market, you take a quick glance, I'm the 116 offer. So if anybody gets filled at 116 on the offer, has to be me first. Me monkey, me have to fill first. Okay, I worked in order routing for, I don't know, the better part of 15 years. There's nothing we're not going to understand about order routing. So this is actually how you route orders. So I'm going to rest out there on the offer. Maybe I'll fill, maybe I won't. All the market has to do is tick up like 2 ticks and I'm filled. So I'm going to sell, okay, the June 455 calls, and I'm going to do it from $1.16. Now, time out. Okay, what else am I going to do? In this case, I'm not even going to hedge. I just want to let it go for a second. I want you to fast forward, okay, 1 month into the future. Okay, I know that this option is good for 114 days. And I also know that some of you that are experienced, you're thinking to yourself, are you out of your mind? A little bit, but are you out of your mind? You're going to make me wait 114 days to collect $1.16. This is absolutely ridiculous. I'm going to go listen to that 0-day expiration guy. And that 0-day expiration guy is what? Okay, he's going to make a buck. Yeah, you can't even make $1 in here, but neither here nor there. The point is, I am not going to wait. I'm not going to wait to make $1.16. Why am I selling this option? Because what people don't understand, and what the biggest change in markets has been, okay, you can make phenomenal amounts of decay by selling back month options. I'm going to say that again, okay? We'll make it a little cooler in here. Sorry, I know some of you guys are freezing, but I'll be honest, it's a little warm here on the island. So what are we? Okay, we're like 81 degrees right now. I'm a little warm on the island. I gotta flip the AC on. We're going to teach you to make phenomenal amounts of decay on longer dated options. You go, how's that even possible? You're about to see. Okay, don't take my word for it. You're about to see. So what I want to do is close up the 114-day options for a second. Okay, all factors being held equal. When I say all factors being held equal, okay, if the market didn't move, I know it is going to move, but if the market didn't move, how much decay is going to occur between the 114-day and the 86-day? How many days is in there? From 114 to 86. Come on, people, how many days? What is that? 28 days. How much, okay, of this premium can you collect in the next 28 days? I want to know. How much of that premium can you collect in the next 28 days? Want to find out? Okay, I'm going to show you exactly how to do it. So let's make sure that everybody's on the same page. We good? Okay. To figure out what it's worth, I'm not going to look at the 455 calls in June. I'm going to look at the 455 calls in May. Why? Let's say exactly 28 days from now, because people say there's no decay in those options. They won't decay. Okay, really? The way I look at it, wow, those things really decayed. They decayed quite readily. Okay, and just again, make sure we're good here. Just a few weeks from now. Just a few weeks from now. What's a few weeks from now? 28 days from now. I'm going to go ahead and I'm going to buy back the exact same option. I'm going to buy back the 455 calls. And I'm going to buy them back for, here, I'll even make it the offer, 52 cents. What do I make? Greater than 50%. You should be able to make, okay, in 1 month between 50. Whoa, that was awesome. My pen changed. Okay. You should be able to make between 50 to 60% in 1 month selling back month options. And you go, how's that even possible? Because what you're not looking at is it's not about theta decay. Everybody's worried about theta. Theta is the daily whittling down of an option's value. Theta decay is what is described in all those crazy decay graphs. Like when we talk about like theta, okay, that's theta decay. Yet we're not actually here for theta. We're here, okay, for what's called Ultima. And Ultima has to do with volatility decay. And that volatility decay is freaking phenomenal, okay? But when you take a look at it, and you, by the way, we can do this, and we've been doing this for years. And we've been actually trading this strategy for 3 years, making money, okay, for over 3 years, doing the exact same thing again and again and again. But we don't just do this naked. We definitely do hedging. And it's absolutely critical that we understand what we're doing. You guys want to do another one? Is everybody okay? I want you guys to see that, because, I mean, how many people here would be comfortable making 50% or greater with very minimal risk? Okay. Like, I'm not holding any short duration option. I'm selling 455s. That's $55 out of the money. $55 out of the money. This is the spiders. Where would we have to get to? 455. I just want to make this point, okay? Because it's a critical point. It's a relative point to be made. To get back to 455, you got to come all the way up here, right? And again, I'm not saying that we can't get here. We can get here. That's 455. We got to go from here all the way up here. We can get there. That's why we're going to learn to reduce risk, okay? Because you can't just, let's do it again. So somebody said, do it again. Okay, so let's go over to the QQQ. QQQ. We'll go to the Nasdaq for a second. All right, why the Nasdaq? I don't know, I wanted to pick another underline. So the Nasdaq, it also has 114-day options. By the way, the Nasdaq, I just want you guys to see, like, I don't speak with words, I speak with positions. But if I wanted to go 114 days out, could I do it? Okay, let's find an option right around $1. Sold. Look, these are the 352s. Okay, the 352s. And again, I just want you to make sure that you guys are comfortable, right? So if I go out there and I sell the 352s, okay, they're going to be trading for $1.04. So those 352s are trading for $1.04. Then, okay, what happens? 86 days, there's 86 days. So I'm just fast forwarding. I'm literally fast forwarding exactly 28 days, right? And I'm going to look at the exact same thing. Okay, there is no 352s, but here, I'll fix that. I will fix this example. Okay, again, this is what we call on the fly. So we could use 350s. Let's use the 350s. It's even easier. Okay, and I apologize for that, but look, it's a live market. So we're going to sell 350, and we're going to collect $1.18. By the way, $1.18 is the bid. Okay, any monkey can hit the bid. And then we're going to fast forward 28 days, and I'm going to look at those 350s. 350, 350, 350, 350. Gold, Jerry, gold. Okay, they're worth about 58 cents. It's exactly this one. And volatility is a little higher in here. This one, I'd have to buy it back, and I'd buy it back for basically 60 cents. I'm making roughly, okay, 50%. Okay, after transaction costs. Okay, I love that. After transaction costs, you're making roughly 50%. By the way, somebody asked about in an IRA. Can you do it in an IRA? Of course you can do it in an IRA. Want to see an IRA? Okay, because I like to show you an IRA. This one's an IRA. Okay, in an IRA, look, I got all kinds of stuff sold in here. Sure, why not? Okay, you can do it in an IRA. By the way, the rules changed. The rules changed 2.5 years ago. You can sell options in an IRA. Nobody, I mean, listen, certain firms might not do it, but you can do it. All right. The rules changed. And that was actually an IRS regulation. So the IRS lifted the rule. That was never a FINRA rule, never an SEC rule. That one actually came down from IRS. Oh, everybody likes to get a hand in the markets. Nevertheless, what you're doing over here, okay, is collecting decent amounts of premium. Okay. Now what do you got to learn? Right? You got to learn to do this again and again. One of the things that I implore you to understand is that I'm not expecting everybody's going to pick up on every nuance of exactly what we're talking about here. Okay. Like, I'm just, be real. Like, that is why when you come to this session, we call it Ultima alerts. We're sending alerts based on our criteria. We're sending alerts to clientele, okay, based on exactly the trades that we are in fact executing. Like, why do you think I have all these accounts? Okay, different accounts or different portfolios. There's big portfolios, there's little portfolios, there's portfolios for $5,000 accounts, there's portfolios for $100,000 accounts. I even have one portfolio in here under Zaba that is for $250,000 and above. Okay, there's all kinds of different size, shapes, and forms because that is what we are here for. Look, you can make money very, very consistently, and it's it's critical to make money consistently. But we're going to learn in a moment about 90% probability and the 10% hammer. But before I get there, okay, I actually want to bring something up because when you think about this, trading and the way that we trade, it's not going to be about one trade. What I want to bring up to you, and I'm just going to draw this out. Like this is the market right now. Let's say that this is the SPY, and the SPY is trading right at 400. We're going to sell some out of the money stuff. We're also going to sell some other out of the money stuff. On this side, this is calls. On this side, this is puts. Okay, what I'm getting into in this case is inventory management. Okay, and you go, what's that? All right, look, this is oh, you can't even see it. That's crazy. Like it actually disappeared. The disappearing bottle. Okay, this is a bottle. It's a bottle of water. Okay, let's say that you are in the business, okay, of selling water. Seriously, let's say you're in the business of selling water. Okay, so you go out there and you sell a bottle of water, and every time that you sell a bottle of water, okay, you make 50% profit margin on it, which is pretty huge, right? Okay, now what's the key to selling water? Anybody? Okay, and I'm serious about this. You go out there and you sold a bottle of water. You must have obviously bought it someplace cheaper. Okay, so what's the key after you sold a bottle of water? I'm not trying to be facetious in any way, shape, or form. You got to do more. Why do you got to do more? Because one bottle of water ain't going to make it. It's not going to make a living. What we're actually going to teach you here is what we term inventory management. Forget about what you might think the market is. Like when you think about big trading firms and so forth, but you really think they're sitting there and they're going like, yay, the MACD is rolling over. Yay, the Fibonacci. I got your 618 right here. Okay, they're not using that stuff. Bigger firms, they use inventory management. All they basically do is go out and they splat a bunch of options on, and they just mitigate the risk in between. That's it. Like, why does this business have to be so difficult? But, okay, I'm going to be honest with you. That stuff doesn't sell on CNBC. When I say it doesn't sell on CNBC, look, I just did a spot today. Every Wednesday, I do a spot on TD Ameritrade TV. You know what they make me do? They make me pick 3 stocks, and they make me pick direction with those 3 stocks. Do you think I really do that? Okay, I've got some directional shots on, no question about it. This is what I do. It's inventory management. All I want to do, okay, is collect 50% on all these options. I don't want to collect 50% on all these options. And if the market moves higher or lower, okay, we're going to have to mitigate risk. Does that make sense to everybody? Does it make sense? Because the one thing, though, that we haven't covered yet is this: 90% probability. We're going to do trades that have amazingly high probability, okay? Most of the trades that we're doing have over a 95% probability of making money. What's going to happen to you, for instance, the other 10% of the time? This is the darker side of trade. I love to talk about this too, because here's the point where most people, they won't take the time. They're like, it's okay, man. You're going to be okay. You're not going to be okay. 90% of the time sounds great. You're going to make money 95% of the time if you follow this. But 10% of the time, the market rips your face off. You go, I don't know what that means. You're going to learn what it means. What people have done in the past, right? And you, I'm talking about you in the chat room right now, okay? What people have done in the past is very simple, okay? You've gone out. If you've sold options in the past, let's actually draw up what you've done, okay? Some of you have learned a strategy called an iron condor. Iron condor. You know what an iron condor is? You sell a call, then you buy a call, and then you sell a put, and then you buy a put. Now, careful, you paid $500 for a class to learn how to do this. What do you want to have happen here? If you sell a put and sell a call, you want the market to land right in here. And you go, what if it doesn't land in there? Well, that's why I buy a call here and buy a call here and buy a put there. So what you want is the market to stay somewhere in the middle. Does the market stay in the middle? Okay, well, I'll tell you what. This trade right here, okay, has a 90% probability of making money. And the first time you do the trade, and it's pretty cool because you learned how to do this trade class. The first time you did the trade, you did it in the spiders and you did a 1 lot and the trade worked. Yes. See, the little captain 1 lot rides again. The next time you trade, you did a 5 lot in the spiders. 5 lot means 5 contracts. And did it work? Yes. Oh, I'm amazing. I'm going to be the next Buffett. Do you realize though that the trade had a 90% probability? If the trade had a 90% probability, you're like, yeah, I made money. Okay, shouldn't be too happy. The third time you did the trade, you didn't step up in the spiders. You actually did a 1 lot in a product called the SPX. What's the SPX? It's the death of you. You just didn't know it yet. So then you go into the SPX. What is the SPX? It is the mother of all products. It's where good traders go to die. So the SPX, you step up, you do a 1 lot in the SPX. By the way, a 1 lot in the SPX is the same thing as a 10 lot inside of the spiders. So you're like, I'm a big boy now. And you know what? That 1 lot in the SPX, it worked. Of course it worked. Okay. They're just roping you in. Then you're like, literally, you're like, I've had 3 winning months in a row. I haven't even had to close the trade, right? So in the 4th month, you go in here and you do a 10 lot in the SPX. Now, granted, 4 months ago, you were captain 1 lot. You were running around with like a little captain 1 lot cape. Now you're trading what? 10 lots in the SPX. You know a 10 lot in the SPX is the same thing as a 100 lot in the spiders. And the second that you place that 10 lot in the SPX, it's like the market's like, we got one. And the market just annihilates you. We literally move from like here. And then like the next day, we're down here and you go, ah, you not only lose what you made on the previous 3 trades, you end up losing 50% of your account. That, people, that is what we term 90% probability in the 10% hammer. It's a total train wreck. Your losses exceed the gains in the previous 3 trades. And I say to you, it's like I could see your account. I could for 15 years. You think I haven't seen this one? I always say this to people like, look, right, the buck stops here. There's no strategy that you're going to come across that we haven't heard of. It's a mambo combo. It's this. Look, there's a call and the put. You can buy it. You can sell it. That's it. Right? How many people have ever actually been through this? Come on, admitting it's the first step. This is Traders Confessions. Okay, trade confessions with Don. All right. So this is how people roll. They go, I made money, made money, made money, made money. Oh no. Okay. Fed minutes are out right now. In 15 years, you get to see this, and you're like, oh, it's brutal. Okay. But then you take another course, you pay another $500. It's another course, and somebody goes, it's okay, man. You can fix it. Fix a dirty word in trading. I don't like that. Okay. And I'm just pointing out, somebody said I already made this mistake. I know. I just like to, poke the little bear in the cave. But then people try to fix it. They go, I was on the right path. And then you take another class of $500 and they teach you how to fix it. I hate the word fix. I really do. Okay. And in fact, I'm going to go as far to say I loathe those that try to fix trades, because fixing trades is the exact same thing as just get out a shovel and just keep on digging. There is no plausible way. Think about this. There's no way that you can fix a trade without adding more risk, more transaction costs, and racking up more losses in an already losing trade. The notion of fixing, it may work. The fix could work, but the very notion, the whole idea of fixing is throwing good capital after bad, which is ironically the first thing you learn not to do in this business. You got to actually learn how to do this right. You got to throw out trades like yesterday's trash, right? So now we're actually going to get into really what selling options premium is about. So what I'm actually going to explain to you here in the next 5 minutes is what we actually do to make money, okay? And then these are what alerts, okay, are based on. When I say alerts, that's what we do here. So this is selling options premium. As I mentioned a moment ago, we sell stuff out here and we sell stuff out here. And we're going to talk about that more in a moment. But what happens, okay? Imagine, if you will, right, you sell those 455 calls, okay? And simultaneously you sell, okay, the 3,200 puts. By the way, the puts, you're not going to collect a dollar on the puts. You're going to collect $2 on puts. The calls, you're going to collect $1 on. The puts, you're actually going to collect $2 on, right? And then you turn around and you sell a couple of days later the 310 put. And up here you're selling, for instance, okay, 465 call. So I'm building a little inventory, right? Now, what do you think is going to happen to you? Sooner or later, what's going to happen to you? I'll tell you what the market's going to do. The market's going to go, and it's going to crush your hopes and dreams right along with it. Okay. You cannot survive in this environment. It's impossible. Okay? I've been in this business long enough, and I'm at the point in the business where I don't mind saying, okay, if you are trading and you are selling options premium and you're not reducing risk in some way, okay, you end up taking a loss in the end. That's it. If there's no if, and, or but about it, you end up taking a loss. And it's critical to understand that very notion. So how do you mitigate risk? Okay. In business, right? We were talking about a moment ago, like water bottles. Okay. All of a sudden, I want you to transform yourself. You're in the business of selling water bottles. So the key is to grind through as many water bottles as you possibly can. You want to go out there, okay, and sell like literally 100,000 bottles of water a year. Why? Because the more bottles you sell, the more times you're going to make what? 50%. But to actually grow your business, what do you have to have? Like to a real business, like what would you have to have? I got set up an LLC. I got to buy insurance. I got to have overhead. I'm probably going to have to hire 25, 30 people because, well, 100,000 bottles of water is not going to move itself. Okay. There's all kinds of overhead. And selling options premium, you're going to have a little bit of overhead. You okay with that? And this bothers people, but enter the hedges. When we actually get involved in here, we're going to hedge. Okay. What is a hedge? It's a risk reduction methodology. All right. There's one, there's two, there's three. So there's three primary hedges that we're actually going to use. One of those hedges we're going to call a risk twist spread. The next one is called a VIX vol spread. The last one is called a gamma iron. These are just three types of hedges. There's other hedges, but these, okay, are three types of hedges: risk twist, VIX vol, and gamma iron. You go, what? Okay. What is a hedge? It's a risk reduction methodology. Okay. I'm going to explain exactly what the hedge is used for in a moment. But before I get to the hedge, let's actually build a little bit of inventory. Say build inventory. Like, look, we were talking about SPY. So we're going to go back and we're going to talk about SPY again. Where's the spider trading right now? It's like at 400. It couldn't be more effective. It's at 400. So perfect. Okay. I'm going to use the spider in my example just to kind of sketch this whole thing out. So once again, here we have SPY. And the SPY is right at 400. Do I own the spiders? No. Do I want to own the spiders? No. Do I have to own the spiders? No. Does it tie up a lot of margin to do what you're doing? No. We're having fun now. I'm going to go out in this case, and I'm going to sell, again, those 455 calls, and I'm going to collect $1. And I'm eventually going to sell, if we continue to rally, for instance, the 65 calls and collect $1 on those. Before you know it, you may even have to sell like, I don't know, the 470 calls, collect $1. This is my upside inventory. Simultaneously, okay, I might sell, as I was talking about, the 330 put, okay, collect $2, turn around and sell 320 put, eventually collect $2. Before you know it, you might even be selling the 300 put, collect $2, right? What do I have right now? I got my inventory on. Now there's 6 different positions and people are like all freaked out. Like, I don't know if I could. Okay, take 2 seconds to put on. By the way, I just filled in that call that we sold earlier. Okay, I just filled it $1.16. So that's what the little ringing in the background was. And you look at this, and the problem with this is, what if the market explodes higher or rips lower? Enter the hedges. What are hedges? Hedges, okay, are sacrificial lambs. They are sacrificial lambs. And when you're thinking of hedging, I want you to think of a sacrificial lamb. Like, it sounds kind of weird, but I live on an island, and our island doesn't have a volcano. But if it did have a volcano, there's an island about 300 miles away that does have a volcano. If we had a volcano, you walk up the mountain every week and you throw the sheep into the volcano. It's a sacrificial lamb, sheep, whatever. Okay. Anyway, hedges are your sacrificial lamb. Do you want to use hedges? No. Do you have to use hedges? Yes. Why do you have to use hedges? Because if you don't, the market's going to come after you. Let me explain how a hedge is going to allow you to function. In this first example, okay? Right in here, see where this says VIX vol spread? I think this is the easiest one. We're gonna put right here, just tiny little trade. And we're gonna call it a VIX vol spread. What is a VIX vol spread? Well, I'm gonna explain it this way. What happens when markets crash? Okay, what happens when markets crash? Anybody? Okay, when market goes down, the VIX goes where? Up. Ba-boom, it explodes. Okay, so does it always have to happen that way? Okay, well, I'll tell you what, if the market went from 400 anywhere near 330, do you have any idea? That's 70 points. That's huge, huge move. Okay, the VIX would inevitably explode higher. If the market comes ripping down, what's going to happen is this market comes down hard. VIX spread, boom, explodes in value. This tiny little hedge just goes, okay? What is it? It's an umbrella, okay? The VIX trade, because poof, it's an umbrella, and does what? Sustains you either long enough to either move these positions, get out of these positions, okay? But the market can crash fast. That's why you have to have hedges. Are hedges going to save you from all loss? No, hedges don't save you from all loss. They mitigate losses, and that's all you have to do, because you already have edge in the decay in here. All you basically have to do is, when you are wrong, which is not going to be often, okay, you got to mitigate some of that exposure. VIX volatility spread puffs up, okay, explodes in value. And you look at the upside, you go, what about the upside? We have a trade called a gamma iron. Okay, the gamma iron is if the market rallies, it has to pass through, okay, a buy side type iron. And you go, what is it going to cost? The costs are negligible. But here's the key. You can't function in this business without those hedges. So it's not, oh, what's the cost? Who cares, right? It's the cost of doing business. You want to be in business, and you don't have to have a lot of capital to do this. I want to make that clear. You do not have to have a lot of capital. Everything you see on the screen here, you could have $2,000 in your account and you can do it. Everything on the screen. You really want to start rocking with a portfolio of options, $5,000. $2,000, you could absolutely unequivocally, you can do it, but you're going to be limited. And I don't mind saying that. In a regular margin account, you're going to be limited, right? $5,000, you can do this. $5,000 in an IRA, you can do this. All right, you do have to have $5,000 in the IRA. $2,000 though, you can absolutely unequivocally, you can sell premium, you can manage risk. It looks like a lot, okay? And that's where everybody goes, what about the margin? What about the margin? Okay, margin is going to be nominal. How do you get nominal margin? You guys want to learn how to circumnavigate margin? Okay, it's pretty easy. We use a brand new product called the micros. Okay, the micros. This product, and you're like, I'm not really all that familiar with it. Or maybe you are familiar with it and you thought to yourself, it hasn't traded very much yet, except the micros just added all the additional expirations. When did they do that? February 17th, 22nd right now. Look at this. Every single day they got expirations. We got expirations everywhere, okay? Gotta love it. They expanded this product and it is a free-for-all now. It's a total free-for-all. And this is a product that if you sell, even if you sell naked options in here, if you sell naked options, it's only going to tie up like $600 a margin. When I hit like review and send, okay, look at my buying power in here. Look, this is an account, okay? That's the buying power reduction, $538, okay? It's gold, Jerry, it's gold. It's critical to understand what you're actually dealing with. Here, look, this is in an IRA. If I were to sell options naked, people, naked in an IRA, okay? Buying power effect in this case, oh, I've already got to put sold, it's only $35, okay? It is beautiful. So this is half the size of even a spider. That's why they call it micro. It's just a beautiful, beautiful product, okay? I'm telling you right now, there is no reason any longer that a retail trader such as yourself with his accounts as small as $2,000 can't do this. Look at the number of positions that I have in here. Look, I'm actually going to go to a $5,000 account. This is it. It's a $5,000 account. Okay, that's it. That's all that's in this particular account. It's a $5,000 account. Look how many positions in here. I got 3 lots. What's a 3 lot? 3 contracts. Okay, that's 3 contracts times 2. That is 6 naked options. You go, where's your hedge? That's what I'm actually using the QQQ, the Intel and Tesla for. Okay, I've actually hedged in alternative products. Okay, we're just getting smarter and smarter right now. All right, with what we're doing. Look, this is why you want to sell premium. You can sell premium in accounts under $5,000. And I stress that constantly. I just beat people up on that. Produces positive decay. You can enhance existing positions. Selling premium doesn't have to be done in autonomy. If you want to do this around positions you already have, okay, you don't ever have to buy or sell the stock. Most of the time, all that inventory talk, okay, in all seriousness, all that inventory talk, it really kind of freaks people out. When I start talking about inventory, I'm actually going to bring this up again because I start talking about inventory and you're like, look at all that he wrote on the screen and there's this, that, and the other thing in here, okay? All of this amounts to one thing, right? Just going to sell premium. You can do it with $2,000 in your account. And it's, again, most of the time, you don't touch it. This is like flying an airplane that basically once you know how to fly it, you're up in the air. Once in a while, you have to take evasive maneuvers. That's what the hedges are there for, okay? But you could be wrong on market direction, still produce very profitable trades. Look, okay, you need this in your life. And I stress that again, yeah, you actually do need this in your life. Selling premium could potentially bring in consistent returns while minimizing your risk. Now, we're going to discuss how to sell premium the right way. Before we do that, we're also going to talk a little bit about criteria. Criteria is what makes these trades. When I say criteria, okay, it's the nuts and bolts behind the trade. Before I even get there, I'm going to show you a few live trades. Okay, everything that we do here at TheoTrade, and again, I mentioned this earlier, and I'm going to mention it again. Everything we do here at TheoTrade is completely no holds barred, right? If you want to see any position that I have on at any given point in time, just ask. Okay, they're all in here. Look. My P&L is negligible today. I apologize. No one else ever shows this crap. This is every position that I have on. These are catapult trades. This is a TheoTheta portfolio. Okay, then I can cruise over here. Let me open up all the portfolios. Okay, this is all the portfolios now I'm running in Tastyworks. Look, you can see a bunch of options on futures. There's little options on futures. I just want to show you this. There's the micros, okay, and then there's the big boys. The big boys are exactly 10 times the size of the micros. So these are big boy trades in here. Big boy trade. What does that mean? Okay, those are going to hold a little bit more margin. Those are one lots in the S&P options and futures. Behold, people, okay, it's a new day and age, and you got to learn to actually change with the times. But here's a few live trading examples. Look, variations of all of the trades that I'm talking about can be done with as little as $2,000 in a funded account and can be done inside of retirement accounts. All I want to show you is, look, we started a track record for Ultima, okay? This is our trade alerts. We started a track record in early, 2021. Now I started with a Tesla one just to have some fun in here, just to explain it, because Tesla is not something I would do right now, because Tesla, honestly, this one will tie up margin. I don't want to tie up that kind of margin, but I wanted you to show you, okay? Look, this is January, okay? Obviously a 58% return. This is to open to close. If you look at this, these are screenshots. What is this a screenshot of? It's a screenshot of thinkorswim. If I come into my account statement, you can see everything I've done. For instance, let's go 30 days back in the spiders. Okay, here's everything I've done in the spiders over the last 30 days in this particular account. Okay, not a huge amount. It's okay. I can do everything in the ES. Okay, this is everything. The S&Ps, by the way, are big. These are much bigger than the spiders. These are 5 times the size of the spiders. So you get to see everything I've done. All I want to do is show you some of the trade alerts. I am going to show you 18 months of trade alerts, and I'm just going to rip through it. Okay, every trade that I am showing you, and I implore you to understand this. Okay, every trade that I'm showing you has been texted out. Okay, we do text and we do push notification. Okay, so every trade, it's my camouflage cover on my new phone. Okay, every trade we text it out. Okay, every single trade. When I say every single trade is texted out, and ultimately, right, what we then do is we manage the positions. We just text out the trades, manage the positions, text out some more trades. I just want to show you 18 months of results. So let's go to the bond short put. Okay, most of the returns are right around what, 52%, 62%. Okay, you see a couple of different trades in here, spiders, all right around the same returns. Okay, and again, I'm showing you alerts. These are trades that have not just been placed by me. These are trades that have been placed, trades that have been sent out to the masses. So right now we have about 6,000 clientele in the in TheoTrade that are logging on there. And yeah, these alerts go out literally to that many individuals. And there's a couple of different portfolios. There's a large portfolio and a small portfolio, and you have to decide whether you want to go with the bigger portfolio. The bigger portfolio clearly is going to need a lot more capital. The small portfolio, anywhere from $2,000 to $5,000, will in fact suffice. But as I'm showing you trades, okay, we're just right now in the what? Okay, we're into still 2021. If you don't mind, I'm going to speed this up a little bit because there's, it's like 100 different trades in here. This is 18 months. By the way, not every single trade is going to be a winner. There's a loss in here. Okay. The losses, though, are few and far between. Remember, I'm doing trades that have over a 95% probability of making more than 50%. Okay. So IWM, bond short put. Once there's a comfort level, and people like a lot of you have no idea, like you've never traded bonds before. Okay. Why would I ever trade bonds? They're spectacular. Tie up a very minimal amount of margin too. It's great. So we actually do, in fact, send out trades on bonds. And then once you get a little bit more astute and you start to step up, okay, you start to trade things like S&P options on futures. And you go, what's that? Instead of trading spiders, we're going to trade something. All right. And I'm still going through. We're going to trade S&P options and futures. And this S&P option on future is worth 5 times, okay, a SPY. So all of a sudden, I flipped the portfolio. The portfolio was trading spiders. Now it's trading ES. Why? Because people are ready to ramp up a little bit. Okay. So then I'm kind of scrolling through these all right around what? The 50% return. Okay. Now, some of them are going to have a little bit of give and take in there, but usually I use, in many cases, even GTC orders. It's a short call. I made 31%. This is a Christmas tree. This is a really amped up trade. So this is, again, up the food chain a little bit. Christmas tree is a type of Ultima trade. These are very long duration options, 85% return. Okay, still going through here, ES short calls. Okay, we're still in 2021. It's just showing you, by the way, this is another one, 92% return. Okay, we're actually bridging our way now into 2022. Okay, here's some of the trades from 2022, another Christmas tree. Look at that, almost a $4,000 profit on 1 unit of this particular trade, which is huge by huge. So as I kind of scroll through here, all right, these trades, I put together literally 18 months of results, and we're right at the end right now of 18 months of results. You go, what happened after 18 months? I'll tell you exactly what happened. I got sick of copying and pasting. So what I show people now, well, is this. Okay, this is actually the TheoTrade site. This is the Ultima TheoTheta portfolio. This is just one of the portfolios. And as you guys scroll through the portfolio, I want you to see, this is every single trade, okay, that we've done. Opening trades and closing trades. To open, to close, to open, to close, to open, to close. Every single trade. And obviously, I had a huge number of trades on. And by the way, huge number of trades on coming in over here. It doesn't look like that much, but there's some contract size in here. And what I've done over the last couple of days, literally over the last couple of days, we closed a bunch of stuff out profitably. Okay, we've closed a bunch of stuff out. Now we're getting ready to amp back up that portfolio. We've closed like everything. This is the Ultima TheoTheta portfolio. Okay, and again, going in here, you just put in your email address. All right, and you can opt in to text alerts. Okay, and then, obviously we fire out your phone number. In this other one, okay, when I say other one, there's other portfolios in here. You can also go to the TheoTheta small portfolio. You're like, what's the small portfolio? Okay, the small portfolio, apologize, I'm logged out. I got to log back in. Okay, the small portfolio is exactly like it sounds. So instead of opting into the bigger of the portfolios, okay, you can, and again, I want to show you this, you can actually opt in to a smaller portfolio. This is the TheoTheta, okay, small portfolio. Small portfolios typically, okay, well, for smaller accounts. All right, and here, again, subsequently are the exact same trades. Now, this is just a site that basically holds all the trades on it. These trades, though, are all texted out to you. Look, if you don't have a lot of time, we get it. Every trade, and I've reiterated this like 10 times, every trade we're doing is displayed live at TheoTrade, okay? But on top of it, all right, we're now doing real-time trade alerts. We have changed substantially what TheoTrade is. TheoTrade, okay, we based, a lot of what we did in the first 7 years, okay, of our existence on educating clientele. We absolutely will still educate our clientele, educate you to understand this, okay? But at the exact same time, we felt that in 2022, when the markets really shifted, that a lot more hand holding is probably necessary. Things got scary. Now, okay, we've shifted the business dramatically to alerts. We've shifted the business to actually doing real-time trades. We are managing our own capital here. I say we're managing the capital, okay, managing portfolios. Why not just send them out? Okay, it's literally it's a mouse click away for us to go ahead and any trade that I've actually executed to send it out. The only thing I have to do at this point, okay, is make the trades more appropriate depending upon your account size, right? Again, a fraction of your time. You're not going to have to be glued to screens. Okay, you can enter every single position that I'm telling you directly over your mobile device, right? And you can enter them. When I say you can enter them, right, you can obviously use Tasty in here, okay? So you can use Tasty, which of course I'm trading on, or, okay, you can use thinkorswim. And again, those are the two primaries that we use. I'm not limiting you to using those particular brokerage firms, but those are the ones that they understand the trades that we're doing, all right, and give a lot of leeway to our clients. And I'm telling you, what better time, okay? You may not have time per se to learn a new skill set, but real-time trade alerts are coming to you. Selling premiums a wonderful hedge for recessionary times. This is going to be the most anticipated recession. Okay, of course, some people are going to argue that there's even a recession coming, and that's fine. Okay, markets could be in a bout of volatility though for years to come. Just like the geopolitical risks, literally today, are proliferating. And I'm not trying to scare anybody. This is the reality that you're in right now. The Fed doesn't have your back. Okay, if you're not comfortable, like you can learn all of this stuff. You can go to TheoTrade right here. You can go here, and we'll teach you exactly what I'm doing. But at the exact same time, while you're learning, hold hands. Hold hands. You're going to get trade alerts anyway. Okay. And you should. Again, as I said, we're going to be volatile for at least the next, few years. This one comes from Brian on March 16th. Wow. I want to say thank you for all you've taught me in the last 2.5 years. Talk about risk twist spreads, duration positions. Started trading options almost a year ago. Missed out on the last market move up, but my IRA is currently up 14.8%. And again, I wanted to bring another one of these emails up because this is March 16th. This is last year. It's last year. Why did I bring it up? Here's an individual who has an IRA who's up 14.8% last year in March, okay, right in the middle of one of the biggest crashes in recent history. Look, the characteristics of selling Ultima Premium, right? Never buying or selling the stock. It's undeniable. You're not using stop orders. You can verify like time frames, probability, profitability is high. It's a perfect strategy to enhance your portfolio. It's an excellent tool though for those seeking, okay, to build returns on a smaller account, and new products allow for the sale of options in any account size. And that's one of the biggest things that I want to stress to you. Like anybody can do it now. $2,000 in your account, you can do it, right? Building a portfolio of options. Do not let the options portion of this intimidate you. If you know nothing about options, look, alerts, let them do the work for you initially. You're still going to have to place the trade. People are like, well, look, it tells you exactly what to do to place the trade. Just basically copy and paste the trade. Selling premium can initially be done for minimal credits and minimal risk. As I said, you could do this with a $2,000 account. You can sell premium and minimize risk. Look, the one key here, you need these strategies for the foreseeable market future. Like I can't tell you, we're going higher, we're going lower. I can't, right? I don't know in the mind of Jerome Powell, but I can tell you volatility is here and it's here to stay. You got to be prepared for this. We can show you how and when to sell premium. Okay, but more importantly, we're doing real-time trade alerts now. Okay, this is what you need to successfully sell Ultima Premium for a living. You're going to have to figure out what stocks or underlyings make the best Ultima Premium candidates. Don't you think we give that to you? What do you think are some of the best candidates? Well, look, we're going to trade micros. We're going to trade the S&P options and futures. What volatility should I seek out? Earlier I was poking fun at Tesla. Okay, you can't do this with Tesla. You just can't do it with Tesla. You do it with Tesla, you're going to die trying. There's too much volatility. A lot of people don't recognize that, right? When I say like something like Tesla, look at this. Thing's like 80% implied volatility. No thanks, you're out, right? We're going to actually dial that in. The reason I'm going through this, you're like, okay, just give me the alerts, man. No, the reason I'm going through all this criteria, you should know, okay? If you're putting your capital at risk, the criteria that goes into this, and I say the criteria, it's like the flight plan. You know, you got to know the flight plan that we're going to be on. We know the right volatility. We know which underlyings. Okay. We know which options expiration. Do I always select 115 days? No, I don't select 114 days. Sometimes I do 86 days. It depends on volatility. Okay. What should be the delta of the option I sell? You have to know, you have to dial in the option to sell. Then you got to dial in which options to buy, because not only this is not just about, selling anything, this is about buying too. Okay. How do I build a position? Do I need a large amount of my capital? Do I need a large amount of capital in my account to do this? This is one thing I've been hammering. Okay. Of course not. Right? Seriously, you do not need a large amount of capital to do this. And that's one thing that I really bark up that tree, because if this was 4 years ago, oh, you had to have $30,000-$50,000 in this. Okay. Now they opened up these micros. Sorry, you have $2,000 and you can do this. Okay. Micros are new. What is the right amount of risk for you? We can help you dial that in. One of the things that we do is we don't just, go, okay, you've signed up for alerts. Here we go. Okay. You got to dial this in. You do have to watch a couple of videos, and that's okay. What are the percentage returns supposed to be, right? How do I protect myself from market crashing? We're going to hedge, right? Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading, detailed, step-by-step recipes to be able to get in and out of executions, all the way down to the details of like, what price do I send this trade? And now real-time alerts as the trade opportunities arise. Look, trading's always answering like what ifs. What's a good stock or ETF? The correct options expiration. What's the correct amount of capital to commit? What strike options do I sell? What options do I buy? How can I limit my risk? Okay, we have those answers. We also have those alerts. We build recipes with definitive criteria, checklists for each unique strategy and each unique variable you're going to encounter. But now we're taking TheoTrade step beyond. Welcome to Ultima Trade Alerts. I mean, this criteria, it's like a checklist that a pilot would go through pre-flight. Okay. Then while they're in flight, what if the stock goes up? What if the stock goes down? Okay. How many option contracts for the account size? When do I close the premium sell? What if we sell off big? Do I bail out of the trade? What if we rally massively? Can I fix a losing position? It's about how, when, why, at what price. And I'm telling you right now, this is just the beginning of the variables. Okay. Just scraping the surface of the variables that you're going to hit while selling options for a living. You can read what selling Ultima Premium is. All seriousness, you can Google right now. You're like, oh, magic Google, tell me about selling options premium. 10,000 pages are going to come up. Everybody wants to sell you something. Okay. Maybe even how to build a few trades. Okay. That's not what we're about. I'm not about like, hey, sell options 115 days out and you're good to go. Okay. You need TheoTrade's alerts. You need TheoTrade's recipe for success. 20 plus years of trading experience. That's just me. That doesn't include the 7 other full-time instructors here. Access to client order flow for 15 years, viewed and studied millions of trading accounts. Okay. I looked at everything at TD Ameritrade. I can tell you, okay, who made money, who didn't make money, what strategies they use. Again, I ran education at TD Ameritrade at the executive level for 15 years. We had the largest options order flow in the entire industry, bar none. Okay. We were doing millions of contracts, right, a week, where most people were lucky to do 200,000 contracts a week. We have seen exactly what works and exactly what doesn't. Ultima Alerts is your recipe for success. Okay. Following strategy and the corresponding criteria requires the utmost attention to detail. And we literally spent years fine-tuning the trade setup, fine-tuning the criteria, and now the real-time alerts on the convenience of your mobile device. Okay. Ultima Income Generator Alerts. The portfolios are the TheoTheo small, the account size, $5,000. You can do this with an account size, okay, of $2,000. I suggest you have 5,000 in there. TheoTheo, which is the bigger the portfolio, it's $50,000 plus. Now, if you say, wait a second, I have a $20,000 portfolio, then you follow this one and do more, okay? This is 12 months, it's a full year, okay? It's $997. So it's $1,000. Before I go any further, I'm just going to let everybody know everything about it, okay? This still includes all the education that you're ever going to need at TheoTrade. We still give you the education that TheoTrade provides, okay? But now we're also providing alerts. And this is something brand new. It's also brand new, even TheoTrade clients, that we are not only just presenting different portfolios, alerts is now at the forefront of what we're doing, okay, of TheoTrade. Text and push notifications. Some of you cannot get text messages because you're out of the United States. We get it. Use push notification. We have our own mobile application. You go, what exactly does that mean? So if I come in here, and I'm actually going to show you exactly what it means, okay? Okay, you come in here and we'll type in Theo. So we built our own mobile application. It's not showing up, okay? That is our mobile application. I love how it disappears. So it's our mobile application. And that mobile application, once downloaded, will actually do push notification. If you go to TheoTrade.com/UA, okay? U is an uncle, A is an apple, TheoTrade.com UA. You can sign up for $9.97. Just hold on a minute because I do want to explain a little bit more about it, okay? The Ultima income generator alerts. These two portfolios, okay? It's a new positive theta portfolio. No whole barred trading approach. And you'll see full disclosure, all trades, all opening, all closing, all hedging. Watch me discuss positions never like before. I even do update videos with all of the portfolios and so forth. The reason I'm running through this, I want you to know TheoTrade's a completely riskless trade. There's a 90-day money back guarantee on it, okay? This is new. We've never done like a year-long trade alert, okay? We're giving you 90 days to experiment with it. So you come in today, you pay $9.97. If anything, if you're not comfortable with in the next 90 days, that's fine. Okay. Exit anytime the next 90 days. And listen to me, you don't have to trade live. There's no excuses, no questions, no commentary needed. Look, sometimes life gets in the way. Open an account with $5,000, okay, and come in here and trade with us. Like, I'm not telling you it's going to be a windfall of profitability with $5,000 in the account, but I am telling you this. If you want to be in this business, you want to survive in this business, you want to make money in this business in volatile times, this is what you want to do. You want to sell premium, you want to mitigate the risk. That's what Ultima is. Again, on the money back guarantee, and I really hammer about the money back guarantee, okay, it's a full refund. Like, we don't want ever anybody that isn't happy here, ecstatic to be here. We have 6,000 clients. So you guys know, we don't even do memberships, okay? We don't do memberships. You join for a year. You go, what happens after a year? If you want to do it again, you join for a year. There's no reoccurring monthly revenue. There's no, it doesn't roll over automatically. We don't do that. Okay. It's not like a gym membership. You're like, how do you get out of the gym membership? I have to give blood. Okay. We don't do that. Like, again, I always reiterate this when I bring up the money back guarantee. Like, legitimately, we want people that want to be here. Okay. Our crew are traders. Our crew, there's no salespeople here. This is about as salesy as it's ever going to get. Okay. At TheoTrade. It's it. And the reason we do this, look, we trade, okay? All of us love actually talking about it. Most of us did educate millions of people at TD Ameritrade and thinkorswim. No one knows this business better than we do. You could go out there, and I'm serious, you could spend $50,000 in stock market education. It's going to pale in comparison to what we do. The one thing I'm not even telling you, you get everything we also do at TheoTrade. There's even a chat room. We're in there all day, okay? You want to ask questions? Go ahead, okay? All the email access you ever wanted. But TheoTrade's completely riskless trade, okay? You will sign up today for $1,000, $9.97, okay? Go to TheoTrade.com/UA. You get the trade alerts for literally for 12 months, but you also get everything else from TheoTrade, okay? There's access to other portfolios. There's ever any class you've ever wanted. I'll go through some of that here momentarily. But at any point in the next 90 days, if you're not happy, get your $1,000 back. Because again, we don't want to have somebody that's, 150 days down. Look, there can always be up days. There can be down days in this business. Stick with us, okay? All right, our portfolios, they make money right now. Ultima alert, okay? Here's some of the opening trades. Again, this is opening trades is what it looks like. Here's the 2022 Ultima portfolio returns, okay? This is based on a $50,000 account. Why did I base it on a $50,000 account? Because that's what I actually used for it. This is the bigger of the accounts. There's the return. That's the exact dollar amount. So on a $50,000 account, and I'm going to be very clear, I never used anywhere near the full 50 grand, but it had to be based on a $50,000 account because that is what I set up the portfolio for. Okay. On a $50,000 account, I made basically 28 grand. Okay. And you're like, oh, somebody did. Look, this is consistent. Okay. I don't want to hear what somebody did and somebody, look, we did this and we did it in front of 6,000 clientele. Okay. It works. And it's going to continue to work right now. Volatility is your friend. Get with volatility. So that's the 2022 portfolio returns. Not too many people had positive returns in 2022. We absolutely did. And this can also be done inside of an IRA. Now, these are weekly videos. Okay, when I say weekly videos, if you are so inclined, not only are you getting trade alerts, okay, you're actually getting a video every Friday that tells you everything I did in the portfolio, in the big portfolio and the small portfolio. Okay, it tells you how big are these videos. The videos are never more than 12 minutes. In 12 minutes, I give you an update on both portfolios. And literally both portfolios are packed in here. We talk about TheoTheo small and TheoTheo big. Okay, kind of cool. By the way, this is what the trade alerts look like. When I say this is what they look like, no, this is what they are. Like this is an alert. Okay, sell one 3,400 put, sell one 4,500. Okay, buy one 4,500 call. By the way, that was closing that one. So this one actually closed out 50% profit. Right? These are exactly what the text messages. Here's another one. That one a little bit more recent, but I popped that one in here. This is again buy the 3,400 puts. Those are the 3,400 puts that I was just talking about in the last trade. Bought those back 50% profit. Okay, this one here, buy back the 4,500 calls again. Right? Those are actually 4,500 calls that I sold, bought back, same option again and again. It's exciting. Okay, I mean, look, this is what the business is about. It's not exciting. It's boring. I'm buying and selling the same thing. This comes from Pat, January 11th, very recent. Thank you for the reply. It's very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with, and one, okay, which I see a pathway to retirement. Regards, Pat. Pat's actually an Aussie, he's Australian. John, this comes from last year. My year-to-date profit from Ultima trades is paid for my yearly TheoTrade subscription. Thank you. Okay, and that was early last year. This one comes from Jeffrey. I want to thank you for all the different staff and point of views this year. Okay, I did more of what works, less of what doesn't. Thanks to selling premium and inflection point spread hedges. Okay, it took over $12,000 to $32,000 in 18 months. I've been doing your method. Thanks again so much. Look forward to your ideas in the coming year. This was actually not yesterday. This was late last year. Okay, get into TheoTrade now. We're going to work with you directly. Look, there are 20 spots on the riskless deal. So what we are basically doing to incentivize people today, and I'm actually going to bring this up on the screen right now, to incentivize individuals to enroll for this and to incentivize you to enroll today. We're opening up 20 riskless spots. What that basically means, okay, is simply this, right? It means get in there now. There's 20 money back guarantee spots in here. All you have to do is come in here. And again, I want to pop the address up there one more time. It is theotrade.com/U. That's U as an uncle, A as an apple. Theotrade.com/UA. Okay. Come in here again. It'll not only give you the alerts, and I want to make something very, very clear. There's a lot more going on in TheoTrade than just these alerts. If you guys have never been in TheoTrade before, look, there's chat rooms, right? There's, by the way, this highlighted, okay? This is actually the instructors talking back and forth. There's chat rooms, there's archives. We actually give you access to all of the classes that we've done in the previous 7 years. It's everything, okay? If you know nothing about options, okay? If you know nothing about options, here's a start here menu. Walks you through options 101, options 201, like good, we're going to learn how to do this. Okay, all of this is at your fingertips. Okay, but what we are in fact, okay, at the forefront of doing right now is bringing people in by trade alerts, and we're doing that simply because we get it. Look, it's volatile. You need help right now. You sign up for it, and there's probably going to be alerts like today. I don't know if we can get you guys alerts literally today, but there's probably going to be some trades firing out as this day actually progresses, because I'll be honest with you, okay? I don't know about you, but I'm kind of liking the project over here. Some volatility starting to hit this marketplace, and I am down for that. So it's 20 riskless spots. It's $1,000. You simply hit add to cart. And I want to take you through this for a second because I think it's important. Okay, as you click add to cart, first name, last name, put in your phone number. Why should you put in your phone number? Because it's going to allocate you for text alerts. Right? Now you can do a single payment of $9.97, but I'm bringing this up right now. Yes, you can come in here and do payments of $500. You can even break it into 4 payments of $250. Why do we do that? I want to make sure that this is for everybody. And I'm bringing this up over here because we want to make sure that it's for everybody. Like, I don't, look, it's not up to me what you're going to do. There's still, just because you break it up and, well, I'll only put $250 down today. you still have a money back guarantee. The first 20 people to enroll today still have a money back guarantee. We do 20 people. Why? To incentivize you to enroll today. Again, we want people that want to be able to trade, that want to be in this business. Okay, get ready for text alerts. These are the phone numbers that you will actually see come through on text alerts. By the way, we're set up in Canada now. Yay, Canadians! Okay, by the way, if you don't, it comes from a 340 area code. The 34 area code, that's the Virgin Islands. So we live in the Virgin Islands right now. All right, so go to TheoTrade.com/UA. Again, TheoTrade.com/UA. As I said to you, okay, there's still the money back guarantee for the first 20 people to enroll. I'm going to answer some generalized questions right now. Okay. Oh, the indicator that I mentioned. Somebody was asking about that. The indicator I mentioned is actually found right to the bottom, all right, of this page. So auto expected move is right to the bottom of that particular page. So I do appreciate you reminding me that. I'm going to answer some generalized questions over here. By the way, I wanted you to see this. This actually came in really recently. Re-up with TheoTrade because of your Ultima income generator program. Based on the market changes taking place in options trading, I was quickly convinced, saw your presentation, that Ultima is the best investment strategy in the market today. Okay, so I just wanted you to know about a special experience I had with Brian Aponte. Brian is like our #1 support person this past Friday, just started with training videos, ran across a technical issue, okay, sent an email, closing time about 4 p.m., okay, thought he would have to wait till Monday. So this guy actually sent in an email, and this is important to me. Sent an email at 3:45. His phone rang at 4:10. Okay, it was Brian. All right, it's been extremely helpful. Spent about 20 minutes on the phone with him. Okay, that's what we're here for. Like, you guys got to understand, you're paying $1,000 to just get some alert service. If you need somebody to talk to, email us. Like, and I'm not just talking about Brian. Email me. Well, you can bounce trade ideas off of us. Okay, it's important. Okay, it is important. And the answer to Michael, eventually we will have auto trade set up for it. Eventually we will set up auto trade. Okay, it's not quite there just yet. So answer questions. What do you really need to get started here? A laptop. You don't even need a laptop anymore. You can actually do it purely off of a mobile device. We have everything you need to get started. This is not a membership. We don't auto renew or bill you again. We're providing weekly videos so you can follow all the moves that we make. By the way, somebody else was asking again for the web address. So let me pop it in there one more time. It's TheoTrade.com/UA. Okay. And we do have quite a number of people enrolling right now. So there's less than 20 riskless spots left. And again, I say that it is an incentive to enroll today. It's, the one thing that you got to realize on here is, again, you can actually break it down into multiple payments or just one payment, but all of these would still qualify for the money back guarantee. Right? So TheoTrade.com/U as an uncle, A as an apple, right? Let me knock out of there really quick. All right, so we're providing the weekly update videos. In 12 minutes, you can see everything that we've done, okay? We provide you access to TheoTrade Mobile, where you get push notifications. Add your cell phone number when enrolling, get text messages. You can email us anytime, receive a response within 24 hours, including trade-related questions. One thing I implore you to understand, okay, implore you to understand is that you can email us. Like, in today's day and age, who are you going to email? Ask Chuck. Chuck ain't even going to answer the phone for an hour, right? If you guys don't remember the commercial, ask as Charles Schwab, it was Ask Chuck. Chuck, don't answer the phone. We will. Okay. Moreover, though, we say email trade related questions. Most of us have actually held many, many different brokerage licenses. Variations of all the trades that we do are available inside of an IRA. And you can do this with as little as $2,000 in an account. Okay. We can help you get approved, okay, to trade options at several major brokers. That's always a sticking point too. They go, hey, wait a second. How am I actually going to get to do this? I'm going to tell you right now, there's a lot of different brokers out there. We here at TheoTrade, and again, there's a lot of education firms out there too. Can I show you something, guys? Interesting. How many different education firms have all these different brokerage firms? We have deals in place with right now with Tasty Trade, Magnify. If you're not familiar with Magnify, Tradier, E-Trade. Okay, we are right now in the midst of renegotiating with Charles Schwab, as Charles Schwab is now the owner of TD Ameritrade. Obviously, we're still doing stuff at TD Ameritrade, No one else has the flexibility, knows the brokerage business like we do. Okay. But we work with all the major broker dealers. And, people are like, oh, I don't really love E-Trade. It's okay. Like we have different firms we work with. Remember, there's 20 riskless spots available. Get results, take action, enroll for TheoTrade now. So I'm going to answer a few more specific questions in here. And again, we'll kind of go from there. I want to make sure that we get those questions answered, though. Make sure everybody's on the same page. Again, it's theotrade.com/UA. All right. Just scrolling up over here. So to the bottom over there. What about other symbols traded? Can $1 million account still trade everything? Only SPX. Yeah, no, if you have like $1 million plus, you would want to use what's termed portfolio margin. You could trade the SPX. The SPX, though, there's a problem with the SPX. It's a proprietary product. It's proprietary just to the Chicago, board options exchanges, SIBO only product. And the problem with the SPX, the markets can get really, really wide. So there's a certain, if you will, with the SPX. And by the way, I come from the SPX. When people talk about SPX, if there's a product that I'm going to be most familiar with, it's the S. Okay, we traded in the S, and I say I work for a group all the way back in the late 90s that traded in the S. So I still know a lot of people down in that pit and really intimately familiar with the SPX. And the SPX can be the greatest product ever, but there's a level of experience and professionalism that's going to be needed in that product that most retail traders are just not aware. Okay, and I'm not trying to talk you away from it. And I think it's Steve. Steve, like, look, it's just a product that it's the beast. Like, I don't sugarcoat that. That thing, it's the beast. And I've been run over by the SPX before, and that's with that's 15, 20 years of experience. I've been run over by for wide markets, so it can be a little bit rough in there. Somebody said, can you simply trade 10x on the $50,000 portfolio or a $500,000 account? Absolutely. Yeah, you can do that. So if you have a $500,000 account, the one thing I'll tell you about a really, really big account to begin with, okay? Don't start big. If there's one thing I implore you to do, don't start big. Even if you're following my text, don't start big. There's like a comfortability, okay, that I want you to have before you actually fire big. Have the comfort, meaning that you haven't been through a lot of cycles of trade. So there's that execute, trade, follow, execute, trade, follow. Just give it a couple of months before you go in big. And again, it's got to work for you. You got to be comfortable. I don't want you to say $500,000 account, boom, use all of it. Okay. Again, there has to be that comfortability. When you're following people in the trades, okay, it's got to be there for you, because these trades can have pretty good fluctuations, especially when we get volatile. Today is not volatile, but they can have pretty good fluctuations. I'm going to read off a couple of names, those that are presently enrolling right now. I'm just going to read off your first name, okay, kind of where you're from, to just signify that we see you have enrolled. It takes us anywhere from 5 to 7 minutes before we actually see your name come up in here. Leonard M. from Michigan, David S. from Michigan, Tim F. from Hawaii, Mark G. from California, Michael C. from Texas, Mark H. from Texas, Andrew R. from California, John S. from Oregon, Warren D. from South Carolina. This is the first batch that's actually come through. And I apologize, I know some of you are enrolling right now and have not necessarily heard your name. As I said, it takes about 5 to 7 minutes. So somebody was saying hey, how many trades a week? So I'll give you this. What's going to happen, and people get frustrated every single time I say this, okay? We probably average the number of trades, 1.5, 2, maybe even 3 trades a week. But what happens a lot of times is people are like, ooh, you don't hear from me for 10 days. And then I'm like, boom, 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 boom. There'll be 5 trades in a 2-day period. When it gets volatile, and I'm pointing to the markets right now, but when it gets volatile, I have tendency to execute. So trades don't come out. One thing you will learn about me, I don't trade because somebody emails in, they go, you haven't sent a trade in a long time. That doesn't do it for me, man. And I apologize for saying it. It doesn't do it for me. I will trade when I am ready to trade, okay? I don't execute based on pressure because somebody's like, I'll leave you if you don't trade. Look, I have a lot of capital. at risk in these portfolios. And we have 6,000 people following into the portfolios. Take it pretty seriously, but I execute when opportunities arise. Okay, and we average probably, and the average week is like 1.5 trades just in the Ultima portfolio. Just in the Ultima portfolio, 1.5 trades in a given week. Between big portfolio, small portfolio, we do a lot more trades in that. But I trade in like these little flurries where I'll like bam, 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 bam. Yesterday, I was trading yesterday. We were rocking. I was actually closing profitable positions yesterday. So I think that that's a really fair question in here. All right. I just wanted to get a couple more. All right. Somebody said, I'm not at Schwab, not at thinkorswim. No, you're fine. So, I mean, to be honest with you, and again, this is my opinion right here. This is the up and coming firm. It's TastyTrade now. TastyTrade's the up and comer. Okay. Everybody will be there. So you might as well be there. When I say everybody will be there within 3 years, okay, TastyTrade will be the biggest trading application in the world. Okay. And by the way, you don't hear any hesitation in me saying that. Will it eclipse thinkorswim? Probably. Okay. Probably within 3 years, TastyTrade will be the biggest trading application in the world. So it's good. All right. I'm just looking over here. Include, yeah, I think we're good. Okay. Fantastic. All right. So I wanted to hit upon any last questions coming in. We'll actually stay in here for a few more minutes, answer a few more questions. By the way, a couple more names are coming through right now. We just saw like Richard T from Indiana. Again, Richard T from Indiana. By the way, I want to thank all of you that are actually enrolling today. It's kind of an unusual market. We've got a holiday week. We've got the Fed minutes ultimately coming out over here. And I want to thank each and every one of you guys for attending today. I'm going to wrap things up. I'll go back and forth and type some answers in on the questions over here. Hopefully we got all of your answers. But if you didn't, just email us anytime, support@theotrade.com. I do, in fact, answer emails myself, Brian Aponte, Matt Williamson, all of us here are here to answer your questions. Thanks everybody for joining us. Have a wonderful afternoon.